All right, let's dive into a tech deal that honestly sounds almost too good to be true. We're talking about a $100 billion bet where one of the most important companies on the planet gets a piece of the action for, well, basically nothing. So, how on earth is that even possible?
This quote from Bloomberg really says it all, and it's what sent tremors through the tech world. OpenAI buying a stake in the chip giant AMD for basically a penny. I mean, it sounds completely nuts, right? Well, that's the mystery we're going to unravel today.
So yeah, that's the billion-dollar question, isn't it? How can a deal like this even happen? And no, it is not a typo. This is one of the most creative, and maybe one of the riskiest, deals in modern tech. And to really get it, we first have to understand the battlefield this whole thing was born on.
See, this isn't just some clever financial trick. It's a strategic move in a massive, high-stakes war for computing power. The AI arms race is really defined by one thing above all else: an absolutely unquenchable thirst for more and more powerful computer chips.
And in that war, for years now, there has been one undisputed king: Nvidia. They've got an iron grip on about 80% of the market for the high-end AI chips. We're talking about the GPUs that are literally the lifeblood of this whole AI revolution. If you want to build powerful AI, you pretty much have to go hat in hand to them.
Now, if you're a company like OpenAI, this puts you in a really tough spot. Their president, Greg Brockman, has basically said they need as much computing power as we can possibly get. They're already at a point where they can't launch new features because they just can't get their hands on enough chips. So you're totally dependent on one supplier, your costs are going through the roof, and your growth is literally capped by this hardware bottleneck. They desperately needed another option.
So that intense pressure, that desperation, it led to this incredibly creative solution. This isn't just OpenAI buying chips from AMD. Oh no. It's a totally new kind of structure that people on the inside are calling a compute for upside plan. It's a way for OpenAI to get the hardware it needs, while AMD gets the star customer it needs to finally take a real shot at the king.
Okay, so the key to this whole thing is a financial tool called a stock warrant. Now, don't let the name intimidate you. The easiest way to think about it is like a really special coupon. AMD is basically giving OpenAI a coupon to buy their stock later for a super low price. But and this is a huge but, the coupon only works if OpenAI helps make AMD a massive success first.
So here's how this crazy coupon system actually works. First, AMD gives OpenAI the right to buy 160 million shares for just a single penny each. But they have to earn those rights. They've got to commit to buying and deploying a truly enormous amount of AMD's AI chips. We're talking up to 6 gigawatts worth, which is just a staggering amount of power. As they hit certain milestones, like getting the first gigawatt online, a piece of those warrants vests, which just means they become active. And here's the real kicker. Even more warrants only become active if AMD's stock price goes to the moon, all the way up to a target of $600 a share. If it all works out, OpenAI gets the chips it needs and a massive payday for helping its new partner win.
Now, to really understand how unique this is, you have to compare it to OpenAI's deal with Nvidia. That was a more traditional, though massive, deal. Nvidia made a direct $100 billion investment into OpenAI. They bought a stake. With this AMD deal, the whole thing is flipped. The incentive runs the other way. AMD is giving OpenAI the potential for a stake as a reward for being a huge customer. The money flows from the supplier to the customer, not the other way around.
So why would two tech titans get into a partnership this complicated and this risky? Well, the answer is simple. Because if it works, the payoff for both of them is absolutely monumental.
Okay, let's break down the win-win. For AMD, the challenger, this is what you'd call a major validation moment. They lock in a massive dedicated customer, which gives them a real credible shot at challenging Nvidia's throne. And for OpenAI, the power user, this is a lifeline. They break their dependence on a single supplier, they get leverage in a super tight market, and they get a huge financial reward if their bet on AMD pays off. It's a beautiful symbiosis.
But, and this is a really big but, let's be crystal clear here. This incredible upside is anything but a sure thing. This is a very long-term gamble with enormous risks for both companies, but especially for the challenger, AMD.
First, let's just anchor ourselves with the size of the prize. If OpenAI actually completes the full deployment, this single deal could be worth this much to AMD: $100 billion. That is a number that doesn't just grow a company, it completely transforms it. And this timeline really drives home just how long of a gamble this is. The first big deployment isn't even slated until late 2026.
the final stock price target they're shooting for? That's way out in 2030. This is a marathon, not a sprint, and there are a million things that could go wrong along the way.
You know, the mountain that AMD has to climb here is incredibly steep. They have to deliver their next-generation chip, the MI450, right on schedule. They have to mature their software, ROCm, to actually compete with Nvidia's CUDA, which has a decade-plus head start and basically runs the industry. They need to build out a colossal supply chain. And, most importantly, they have to prove that their gear can actually run OpenAI's most advanced models at a massive scale. One slip-up on any of these could put the whole deal in jeopardy.
When you zoom out from this one deal, it starts to look like a perfect case study for a much bigger and much more urgent question that's being whispered all across the AI industry.
This deal is a textbook example of something called circular financing. Think about it. A tech giant invests in an AI startup. That AI startup then takes the money and uses it to buy a mountain of chips from the tech giant's main competitor. You just have capital, equity, and compute power all swirling around between the same handful of mega companies, pushing each other's valuations higher and higher.
And, we've seen a pattern a little like this before. This quote draws a really chilling parallel to the dot-com bust. Back in 2000, companies signed these massive long-term contracts for fiber optic cable, betting that internet demand would grow to infinity. But when that demand didn't show up, the whole system just imploded. So the question is, are we just seeing history repeat itself, but with AI chips instead of fiber?
Which leaves us with this final, really provocative question. Is this kind of wild, creative, high-stakes deal-making the future of innovation? Is it a necessary way to fund the trillions of dollars it's going to take to build out AI? Or is it just a sign of a massive self-fueling bubble that is just waiting for a pinprick to burst? That, right there, is the $100 billion question this deal forces every single one of us to ask.